Hello, this is Davide Biocchi speaking, and here we go for my weekly intermarket analysis. Let's start with the euro dollar that is really doing good, trying to recover from the minimum that we have recently seen around the parity, a little bit less, and then rebounding and reaching the level of 1.023 as it is right now. So more or less the next target could remain 1.037 if, let's say, there will be some possibility for an additional recovery. Otherwise, we will see probably the market already back to the support that now I think I can identify, and we can assume at the parity, around the parity. So this is for what concerning the euro dollar. So let's say, and let's continue with the gold. So the gold was doing really so good because the gold reached and hit again after a long period the quite strong support that worked anytime it was touched, let's say, after the COVID, and this target is 1,780. The price was there but rebounded later, and right now the price is around 1,730, around that price. So let's say that the next target will be 1,765, and this will work as a strong resistance, and later we will have additional in case of, but let's see what is going to happen. Let's have a look also at the crude oil. The crude oil was able to reach again, to test and to react on the price of, let's say, on the price of $95 per barrel. Now the price is really below this level and could even go to test the next support of $90. Below $90, we have a very strange situation in which the crude oil can even go down and down to reach 85 and then later even 75 as target dollars per barrel. But if it will react, it will still maintain the trading range that is 95 to 123, or if enlarged, 90 to 130. So let's say that it will be very interesting to have a look at it. Let's switch immediately after to the stock indices, and let's start with Euro Stock 50 that was and still is reacting. So we are now around 3,600 as a present price. So we are 200 points far from the very important and relevant level of 3,400. That, in my opinion, is a watershed. We have a market above and a market below that level. It was tested so many times, but this, finally the market reacted. So the more we stay higher than this, higher, the better it is, because this is a really important target. So now we are 3,600 and even more, and let's hope the market will continue this way. For what concerning the US indices, I expect the market to continue this short trading range. Let's say something like after a strong, let's say, reaction that we have seen, the market that is still there around that level, that will continue remaining there until the Fed press conference on Wednesday. Let's say this will be, in my opinion, the most important situation that we will see. The market will continue this sideways, waiting for the words from Mr. Powell to understand what they can additional do. In my opinion, the recovery that we have seen recently was, let's say, because we have seen a lot of hedge funds and similar that were short closing their position. Okay, so it was short covering, in my opinion, what guided the market to raise a lot. I expect the market to react after that, but let's see what is going to happen. Obviously, someone that was really outside the market, when they have seen the market growing because of this short covering, they started even buying some stocks because they need to have some of them in the portfolio. So it was a market that started growing because of the short covering, but later also some net buyers were in the market too. So very similar situation. We have also on the Nasdaq, really similar. The Nasdaq was even stronger, even if the last day reaction was even, let's say, more intense. So this is a very important and decisive week, in my opinion. Let's see what the Fed will tell us, and this is the story for this week. Thank you very much for being here. See you next week. Bye-bye.